Which is the best dividend stock to buy, Verizon or Macy's? This is an interesting comparison, and I'm going to answer that question in this video, so stay tuned. Starting with the dividend yield and the payout ratio, looking up here, you see Verizon's very robust 7% dividend yield as of its most recent update, and Macy's with a not too shabby 2.39% dividend yield. The next thing I wanted to look at was the payout ratio, and this measures the percentage of the company's earnings per share that it pays out in dividends. It measures the sustainability of the dividend, and it also provides insight to the room for growth in the dividend payment, increases in the dividend payment. So the lower the better here. Verizon at 50.83% is way higher than Macy's 14.7%. So at this pace, Macy's dividend is more sustainable and has more room to grow compared to Verizon's dividend, even though Verizon's dividend is much higher right now. The next metric I wanted to evaluate was the revenue growth quarterly. And looking at this, they have similar revenue growth rates. Verizon and Macy's are not companies that are expected to grow revenue fast. In fact, less than double digits. In low single digit revenue growth would be reasonable to expect from these companies. These wild fluctuations you see here from Macy's was because of the pandemic. Of course, it had to shut down its stores, and then when it reopened, it was comparing against this shutdown period, so revenue growth looked better because it was coming off a year of crashes. Here, what I have is the operating profit margin over the trailing 12 months for Verizon and Macy's, and a clear advantage here for Verizon with more than 3 times higher operating profit margin over the last, I would say, since 2016 when Macy's operating margins really started to fall. And in the recent trailing 12 months, Verizon at 22.27% compares favorably to Macy's at 6.65%. I will highlight that Macy's has made some excellent progress in cutting down costs, in optimizing operations, and that's been a tailwind for the company. It's now more profitable than it was before the pandemic. You can see that here. A margin of 6.65% is higher than where they were 2018, 2019, and that's a result of improvements they've made to the business when they had to shut down. The next metric I have pulled up here is cash flow from operations to sales, and again over the trailing 12 months. This measures how good the company is at turning sales into cash flow from operations. Verizon does a meaningfully better job at this metric than Macy's does at 27.14%. Macy's is at just 6.38%. This could be because Macy's needs to reinvest its dollars into inventory and into maintenance for its stores and upgrades consistently, and all of those uses of cash bring down its cash flow from operations, which is a continuous headwind for Macy's. Finally, I wanted to look at their valuation, and I chose to use the forward price to earnings ratio looking out 1 year ahead. And neither of these stocks is expensive. Verizon trading at a price to earnings forward of 7.697. Macy's trading at a forward PE of 5.096. So these stocks are both inexpensive. Now they're inexpensive for a reason, and that's partly because they're not going to grow very quickly. In fact, they're not expected to grow double digits. Maybe low single digits If these two companies can grow at, mid-single digits over the next decade, investors would be very happy with that kind of growth. So these are slow growing companies and highly capital intensive, right? Verizon needs to spend billions of dollars on on building out its new network every time there's new technology, the most recent being 5G. And Macy's is a brick and mortar retailer when more consumers are shopping online. So, there's a reason they're cheap. So, to answer the question in the headline, which one of these two stocks would make a better dividend stock to buy right now? I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. I would say Verizon would make a better dividend stock to buy right now. The company offers a much more robust dividend yield, and it's experiencing better in terms of operating margins and cash flow from operations. So it's an overall more profitable business on more sound foundations than Macy's is right now. So if I had to pick one of these two stocks to buy as a dividend investor, I would choose Verizon. All right, that's all I've got for this video. As always, I really appreciate your viewership, and if you like this video, I'm going to add a couple of videos at the end of this one that I think you will enjoy. So please click on one of those, and I'll see you over there.